If capital dries up, companies looking to go public could freeze in the IPO pipeline, causing problems throughout the system. With us now is the managing general partner of Icon Ventures, Joe Horowitz, a veteran venture capital investor who serves on the board of the National Venture Capital Association. Joe, my notes tell me that you said back in the fourth quarter of 2008, a time sort of like this, with stocks going down a lot, you invested in 5 companies during the depth of the financial crisis, and all 5 of them turned out to be big winners. What are you doing now?
Well, I think that's right. We have seen cycles like this before, although nothing that comes close to the calamity of what the virus situation spreading in the world is creating. But absolutely, I think when you see a situation where the markets pull back as dramatically, 2 things tend to happen. One is the less experienced venture capital firms that have lots of capital tend to be afraid to invest because they worry about their next fund. They worry about whether they'll be able to raise the next fund. So we call it the syndrome of deep pockets and short arms. And so it is a natural pullback for those firms that haven't been through cycles before. And frankly, the system has been far too awash in capital. So that kind of pullback is welcomed by most of us that have been in the business for a while.
Deirdre,
and yes, we do exactly what I said. We kind of lean in on some of those companies that are more deserving.
Deirdre, what are you hearing about the IPO pipeline and whether it has stalled?
Well, I'm hearing that there are some IPOs that have been put on ice, but as Joe's referring to, there's going to be companies that can move forward, and it plays into a theme that we have actually seen play out certainly over the last year, is that growth, maybe more sustainable growth, not growth at any cost. So I think that you'll see some sectors struggle while some, perhaps in enterprise software, could continue to do well. But you might see direct-to-consumer companies have a hard time, particularly those companies that are notching huge losses. So it may be harder for them to come to market. I think DoorDash is going to be extremely important. They filed confidentially, which basically means they can wait in the wings for as long as they want. But we know that this is a business that burns a lot of cash. Are they going to be able to actually move forward after taking that first step?
Joe, tie it all together for us. What would it take for the capital markets to get back to a good place?
That's a really critical question, Tyler. Thank you for asking. And I think Deirdre has it spot on. Companies have to be a lot more capital efficient. But the overall condition of the capital markets is critical to our economy. It's critical to our global competitiveness. I believe that Chairman Clayton at the SEC and the folks there are really trying to understand how to make it easier for companies to go public and be public as a small cap company. And I think if you look longer term in terms of the following year from now, having the right person in the Oval Office will make a big difference, somebody that really understands the challenges of the capital markets. And I don't want to be political about it, but a Mike Bloomberg will make a huge difference if he were at the helm in a situation of this kind.